All right, a muted day on Wall Street, but for the week, the major averages posting solid gains. The S&P 500 also hovering near a record high. But our next guest is raising concerns about valuation. Joining us now is David Bahnsen, CIO of the Bahnsen Group. So David, when I just referenced valuations, I don't know if I'm necessarily talking about the market overall, but perhaps one area of the market where we're talking a lot about valuations right now, big tech, right? And sort of that Mag 7 trade. How are you sort of thinking about Mag 7 versus the rest of the market, and whether Jared was breaking down some versions of broadening out we've been seeing. Are we going to keep seeing the broadening out, or is the Mag 7 trade going to be the leader in 25?
No, I think you're going to see more broadening out, but it really is impossible to separate the story about the valuation issues with big tech and Mag 7 from the overall market because of the very concentration issue that many of us are talking about. In other words, if the top 5 to 10 companies of the S&P 500 made up, 12 to 18% of the market, it's a very different story. When it starts making up 30 to 40% of the market, and you essentially have 10 companies that are 40% of the S&P 500 and 490 companies that are just 60%, that makes the valuation story a market story because it has permeated this broad cap-weighted indexing so much.
So what then is the risk here, David? I mean, and we should mention, of course, we've been having this conversation for a while, right, about this concentration, about valuations, et cetera, and nothing really has meaningfully changed.
Well, those are very dangerous words, of course, because nothing had changed in 98, nothing had changed in 99, and then a whole lot of people felt a change in 2000. I agree with you completely that you don't know about the change until it happens, but history isn't really ambiguous about this. There will be change, and I don't think timing it is possible. I think being sensibly balanced going into the change, which is inevitable, is the right thing to do, and companies trading at 80 times earnings revert to the mean. I don't think that the risk is so much that there's going to be an immediate violence like the 70% drop in the NASDAQ of March 2000 that lasted for 15 years. I think it's going to be a repricing to some normalcy that a lot of these investors don't know can happen. They've never experienced a real drawdown. Anyone who's been invested in this space for 2 years, 3 years, they haven't seen it. So I think that's the risk, is that there will be a reality check for a lot of people, and yet I don't believe that the entirety of the market is overpriced. I think a lot of the more defensive sectors are very reasonably valued. There's good cash flow growth, there's good profit growth, and where there's reasonable valuations, the risk-reward trade-off is much more attractive.
Well, David, sticking with the ones where there are high valuations, so if there is going to be, or I should say when there is going to be, in your view, this repricing, what are your top contenders for what could trigger that repricing?
With NVIDIA, it could very well be fundamental because of order flow declining. It also could be margins having to inevitably come in. I happen to think both of those things are going to end up happening at some point. All it takes is 1 quarter of Microsoft, Amazon, or Google announcing that they're ordering less from NVIDIA, and the kind of virtuous cycle that has driven that space becomes a negative feedback loop. But it also could be that order flow continues and yet margins inevitably come down. I don't think anybody has ever seen a tech story presume expansion of margins like this. It is inevitable that margins will compress. And those are two stories that could be fundamentally catalytic, apart from the fact that just the valuations itself could correct. People should understand, too, NVIDIA was down 26% a couple weeks ago from its high. It's more or less treaded water for 6 months, and we've been in a robust bull market. So I don't think that this is necessarily hypothetical. NVIDIA has already been a big laggard for the last 6 months, but it's up huge over the last year, 2 years, 3 years. So there's no reason to think that the pain has come yet. But already you see some of these things slowing down. You had a good January in markets, and yet I think 6 of the 7 Mag 7 names underperformed the market. I don't think this is anything outlandish that I'm predicting here.
David, I want to talk tariffs for a second because it's a question we keep asking ourselves. We have people asking us, right? What does all of this sort of mean for the market in terms of, are we going to get full tariffs? Are we going to get no tariffs? Where do you think it sort of lands? And I guess really perhaps the more direct question, what do you feel like the market's pricing in right now in terms of tariffs, and where do the risks lie on either side?
Markets cannot price in tariffs that don't happen. And so to have the Dow up 350 points yesterday and the S&P and NASDAQ each up over 1%, because instead of getting an announcement about a bunch of reciprocal tariffs, we got the memo ordering people to study the idea of asking questions about one day getting back to us to report on tariffs. Okay, markets are not going to price in committees and questions and studies. So I believe two things are true right now. I'll say them quickly. I think that the president loves talking about tariffs, and I think the president does not love doing tariffs. And markets right now are pricing in both of those things very well. It could change at any time. But so far, whether it's negotiating deals with Mexico and Canada, whether it's, setting the stage for some other kind of cosmetic victory here, or even a substantive victory there. I think a big master negotiations underway with China that could involve currency, IP theft, other issues. There's a lot going on, but none of it involves tariffs actually being imposed.
And so the market keeps on rising, more or less. David, really great to catch up with you as always. Hope to see you soon.
Thanks so much.
Thanks.